this is Skip Sanders.
It's gonna pop up on my
You
page.
are listening to WGHCLP 98.3 FM Chicago. Change happens here.
Okay. All right.
This is
Alright. See that camera's working. Trying to think what is the best.
the audio.
Yeah, it's on. Can you mind sitting there actually? Yeah, the camera's a little better. Yeah, we're off the air right now, but should be fine.
I still can't share it on Instagram.
Yeah, it's not on Instagram yet.
Oh, it's on
It's
Facebook.
Facebook. I have to turn it on Instagram. Let me check this real quick. Alright. Okay, I guess. Alright, let's get it.
Reader's Digest called the World Trade Center when we announced the largest building project since the Egyptian period. I'm Guy Tizzoli, the president of the World Trade Centers Association. Initially, I was the director of the World Trade Center.
Let's get it on and popping.
We started construction
There we go.
in 68.
Okay.
Over 100 years old. One day, we found a homemade plywood. Today, it's this rusty thing like a torpedo. It had in it 2 packs of cigars.
All right, thank you all for tuning in to WGHC 98.3 FM, your voice and music, your station. My name is Yvonne Badu, and I'm a parallel entrepreneur and a wealth multiplier. I'm the founder and CEO of Badu Enterprises, LLC, which is a multinational conglomerate in the finance industry. So today we're here to talk about the topic of life insurance. I'm here with my beautiful wife today. How's everything going, Yvonne?
It's going good. How are you?
Yeah, doing pretty good. All right, that was our mic check as well. So thank you guys, and welcome to the show Money Talks, where all we talk is money. And today we're here to talk about a very important topic on life insurance, and just basically a Q&A segment. And if you do have any questions, you can feel free to post. We're live on Facebook, we're live on Instagram, and we're also live on the radio, WGHC LP 98.3 FM, which is what you're listening to right now. And if you want to listen to our live stream, we do have a live stream as well. You can listen live at wghcradio.org, and then you click on the Listen Live tab. So if you're ever not in your car, or if you ever don't want to get on Facebook or Instagram, then you can actually get on the website at wghcradio.org. And if you would like to sponsor our station, please make a donation safely through PayPal on our website, which is wghcradio.org. All deductions are fully tax deductible. So, just something to keep in mind there as we approach the end of the year It's nice to get some donations out there. But this is WGHC FM 98.3 or 98.3 FM. And we're all about change, and change happens here. So before we get into the topic, and I'll introduce who my wife Yvonne is in a few minutes, let's get into a market report. This report is as of November 20th, 2020. Last week began with more good news on another COVID-19 vaccine. So anytime that happens, that's pretty good news. Sparking a rally in domestic and global stocks. The Dow set a record as it neared the 30,000 mark. So the Dow is near 30,000 points, essentially, with cyclicals and small caps advancing on hopes of a speedier economic recovery. The Russell 2000 and the Global Dow each gained more than 2%, while both the Dow and the S&P 500 added more than 1%. The NASDAQ advanced 0.8%. Among the market sectors, energy, financials, and industrials surged. Crude oil prices and treasury yields climbed while the dollar slipped. So overall, the stock market went up on Monday. Things were looking pretty good because of good COVID-19 vaccine results. And then also hopes that we would have a speedier economic recovery. Stocks closed lower last Tuesday, powering record high gains from the previous day. Only the Russell 2000, 0.4%, and the Global Dow, 0.1% advanced. The Dow was at negative 6%, negative 0.6%. The S&P 500, negative 0.5%, and the NASDAQ, negative 0.2%. Treasury bond prices climbed, sending yields lower. Crude oil prices rose while the dollar fell. A surge in COVID-19 cases and hospitalizations overshadowed encouraging vaccine development. So basically that's what happened. That's why the market was down that day. In response to elevated virus numbers, several states imposed new restrictions on gatherings, which investors hate, of course, because it doesn't add more to the economy. And ultimately, Federal Reserve Chair Jerome Powell said last Tuesday that the rising number of COVID-19 cases is a big concern. For some reason, he's always coming out saying negative things. But it's a big concern, and the economy will need additional fiscal and monetary policy support, which is true, meaning that we need more stimulus. Stimulus checks, stimulus money needs to arrive ASAP, like today. Among the major market sectors, only energy and real estate posted gains. Last Wednesday, new COVID-19 related restrictions aimed at slowing the spread of the virus eclipsed news that progress is speeding up a vaccine. The Russell 2000 fell 1.3%, followed by the Dow and the S&P 500, each of which dropped 1.2%. The NASDAQ lost 0.8%, and the Global Dow dipped 0.5%. Treasury yields and crude oil prices climbed while the dollar approached its lowest level in nearly 2 years. Each of the benchmark index or market sectors essentially lost value, with energy, consumer staples, healthcare, real estate, and utilities the hardest hit. Now let's see what happened on Thursday. Mega caps and tech shares pushed stocks higher last Thursday. Despite rising COVID-19 virus cases here and around the world, several states and countries have tightened restrictions in response, which makes sense, right? A report that fiscal stimulus talks would resume may have helped the market as well. Of the indexes, essentially only the Global Dow lost value. The NASDAQ gained 0.9%, Russell 2000 gained 0.8%, S&P 500 gained 0.4%, and the Dow gained 0.2%. Crude oil prices rose while the dollar and treasury yields declined. So that's what happened on Thursday. The stock market went up. Now let's talk about Friday. Stocks were mixed last Friday, with the Global Dow and the Russell 2000 essentially breaking even, while the Dow and the S&P 500, as well as the NASDAQ, actually lost value. So we had a bit of a mixed week. Investors weighed reports of an application for emergency approval of a COVID-19 vaccine against the possibility of further restrictions, shutdowns, and layoffs. Of the major market sectors, only utilities inched ahead. Information technology, or IT for short, financials, and industrials lost the most by the end of the day. And then crude oil prices rose, treasury yields fell, and the dollar was mixed. By the end of last week, the small caps of the Russell 2000 and the global Dow posted notable gains. And then ultimately, the NASDAQ inched ahead. The NASDAQ is mainly composed of technology stocks, and we'll talk about some of one of the indexes today, at least the S&P 500, which is composed of the top 500 companies in the U.S. The Dow and the S&P 500 each fell nearly 0.8%. However, following last week's performance, the global Dow has joined the other benchmark indexes in surpassing their respective 2019 closing values. That simply means that all the major stock market indexes are actually up this year, which is good. I mean, that's great news for the economy and for investors. So far this year, the Dow Jones is up 2.54%. The NASDAQ is up 32.12%, which is insane. S&P 500 is up 10.11%. For those with life insurance policies that have a ceiling, you guys are doing pretty good. Right? If you have a ceiling of anywhere between 12 to 15%, a ceiling is the highest you can earn on your policy in any given year, and you're in the S&P 500 index, it means your policy is earning 10% return on investment right now, which is good. I mean, that's a great return. The stock market on average earns about 9%. So if you're beating the market in a recession year, that tells you a lot. That even in a recession, you can put your money in the S&P 500 index, and the money can still grow and expand over time. The Russell 2000 is up 7%. Global Dow is up 1.29%. Federal funds rate is, is at 0%, right? Interest rates are at 0%. And then the 10-year treasuries are at 0.82%. So what's to happen this week? This is a very short week for the market because of the Thanksgiving holiday. Happy Thanksgiving to everyone out there. I know we all can't celebrate as much as we want to or we used to, but hopefully you'll enjoy some turkey and anything else you decide to eat with some family members. Thanksgiving week is filled with important reports, which will give a final picture of the state of the economy in October. The second iteration of the third quarter gross domestic product, or GDP for short, is out this week. The first estimate showed the economy flipped from a second quarter estimate of negative 31.4% to a 33.1% growth rate in the third quarter, which is huge. That basically takes us out of the recession. So that's pretty good. And then orders for durable goods have risen for 5 consecutive months. So that's good. That means people are ordering more durable goods through September and are expected to advance again in October. And then also sales of new single-family homes slowed in September, which is usually not good news. But existing home sales continue to soar, though. The October numbers are expected to reverse course for new home sales and come in higher than September. Finally, an important indicator of inflation, the Personal Income and Outlays report, revealed that inflation at consumer spending level, or at the consumer level, has been muted for much of the year, essentially. So let me just go on the next page here. And that's advancing at a rate of 1.4% through September. October's estimate is expected to remain at the same level. So there you have it. The market is still doing pretty good, right? You should still be investing your money. You should ultimately still be, just going out there. Don't fear the fact that the market might be going down or started off low. As a matter of fact, you have the opportunity to invest at a lower price, basically back then, and now your money is growing over time. So even in a bad year, even in a recession, even during tragic times like COVID-19, we can still make it. We can still be doing good. So as you can see, the stock market is doing good, and it looks like the economy is recovering much faster than we expected. So with that being said, welcome to the life insurance segment. Today I'm here with my beautiful wife. I used to call her my fiance, but now she's my wife. Over to my right, so I will be leaning my head to my right a little bit for those that are on the Facebook Live. Let me actually move into panel mode a little bit. And let me just move my mic this way. Of course, we're live today on the radio, WJT 98.3 FM. Your voice, your music, your station, and also change happens here. Today, we're here to talk about the topic of life insurance. And shout out to our pastor, Pastor Leifert. He said, let's go, guys, partners in Christ. Absolutely, great job. We also do have a life insurance presentation at church, Christ Center of Hope, December 6th. If you guys want to find out more information. Today, we'll just scratch the surface today. We're just doing a brief Q&A just to give you guys some insight about life insurance. I know we're approaching the end of the year. And as you have your end of the year decisions and your budgets and things of that nature, I want to make sure that we're doing things smart. And shout out to Jamil, one of the top producing life insurance agents on the planet. He said, this is amazing, Jeff. I mean, this guy is doing quite a lot, let's just say. He's somebody who I met, I believe it was last year. He reached out to me while I was in Vegas, actually, and got to know him. He's also tied to Malcolm M.J. Harris, who's one of the top producing life insurance agents and brokerages as well. So we have a lot of big shots on listening and speaking today. So welcome to Money Talks, Miss Yvonne Badu. Definitely appreciate you for joining. How's everything going with you?
Everything is good. Hello, everyone that is listening right now. We really appreciate you for taking the time out to listen to us and, get more knowledge.
Absolutely. Absolutely. So, Miss Yvonne, can you tell us a little bit more about yourself and also your organization that you're representing today?
So, I am the CEO of Badu Life and Health Solutions, LLC. It was started because I noticed that there was a lot of people that didn't really have knowledge about life insurance and also don't really have life insurance. And I thought it was very important for me to, alongside with my lovely husband, to start something that can benefit people from Ghana, people from the whole diaspora, just people all over the world. I feel like this is a great mechanism for people to start a great financial foundation.
Sounds good. Man, you have such a soft, nice voice. Man. My, oh my, let me not start. But
Don't start now.
all right, and then, so you're the founder and CEO of Badu Life and Health Solutions, LLC, so you're the big boss. I'm just the guy that, just does stuff, right, for the company. And I'm also the co-founder of the company and the CEO of Badu Enterprises, LLC, which oversees the 12 companies within the Badu Enterprises brand. So, Miss Yvonne, I just have a few questions for you today. Just want our listeners to gain some insight about life insurance, why it's important, why do we need it, what it's all about, what are the different types, and where can you get this stuff, right? So the first question I want to get into is, and some of this stuff will be real, by the way. We don't mean to offend anybody. We don't mean to hurt anybody. We're simply looking for you to elevate your wealth, especially as we step into 2021. We really want you guys to be locked and loaded and be prepared, because tomorrow's not promised. With COVID-19 and everything that's going on in the world, I mean, tomorrow's truly not promised. You got people like Jeremiah, who's 33 years old, last I checked at least, and he's, in ICU, or he just got released from the ICU from COVID-19. I mean, this stuff is killing people, right? It is a real disease. It is a real sickness, so it's something to be taken serious. But in general, tomorrow's not promised, right? I know a few people that unfortunately have passed away in 2020, and some of these folks are young, right? You're not talking 70 or 80, you're talking young folks. So my first question to you, Miss Yvonne, is it true that most people don't have life insurance?
Unfortunately, it's indeed true. I read something a while ago. As of 2020, 59% of Americans have life insurance. However, half of those Americans are underinsured. And the reason for being underinsured is probably due to them having a policy under their employer, which, it's not entirely sufficient to protect them and their family.
Right.
There's a huge problem because it's either that people are not getting educated enough about life insurance, or that either people decide to opt out of getting a life insurance, which to me personally, I feel like it's kind of selfish, because this is something that is going to help you and your family.
That's true.
This is something that will help you build a legacy for generations to come. Another reason for this is probably, like I mentioned, that they're just underinsured.
Okay. All right, appreciate you for sharing that. And for those on Facebook Live, please, I just connected an audio device so that you can hear a bit clearer. So if there's a lag or if there's something wrong with the audio, please let me know. And this is for Facebook Live, folks. For Instagram, we're still on the same sound, same audio. But Yvonne just shared a great point. I mean, basically, most people in America are underinsured. They oftentimes get the policy through their job, and they don't really know what the truth. They haven't really spoken to an advisor to really get an idea of how much insurance do you actually need. They don't necessarily have that knowledge or that expertise. And Jamil also said that that's correct, Yvonne. When they leave their job, they no longer have coverage. That's true.
That's right.
So when you leave your full-time job or part-time job, you basically don't have any coverage. The coverage expires, I believe, within 30 days of leaving the company. So that leaves you uninsured, essentially, which is pretty bad. Okay, so basically, it's basically true that most people don't really have at least good life insurance. So why should we get life insurance? Why is it even important?
Well, life insurance is used as a financial strategy, mainly to help you and your family in the case where there's a loss of income. People can use it when there's times of definite need.
Okay.
They can use it to pay debts, whether that's in the form of a mortgage or loans or any type of expenses. Especially in the times that we're in now, this is a great tool to use to cover loss of income. So I feel like it's very important in those aspects. Not only that, it's good for people that are newly married. It's good for people that want to build a family.
Okay.
It's even good for those that are trying to start a business or have a business, but they need a financial foundation that can just leverage them. So, yeah.
Okay, that's good. I mean, the truth is we all need life insurance.
Yes.
Every single person, even the newborn babies, need life insurance, right? Because we don't know what can happen. And I know we touched a lot about life insurance being used as a tool to basically help us, in the unfortunate event of death, but it can also be used as a wealth building tool.
Yes.
So basically, when you're talking about life insurance is an agreement between you, the insured, and an insurer, basically an insurance company. So in reality, you have this insurance policy, and it's basically covering you in the unfortunate event of death. But there's also policies out there that can help you build wealth.
Mm-hmm.
So going along with that, should young people get life insurance? Like, what do you think about that?
Absolutely, 100%. Young people should take advantage of life insurance, especially those that are in college right now.
Okay.
So it's great to start building your finances at that young age, because one, premiums are lower when you're younger.
Yep.
So, why not start now? It increases as you age. And, it just kickstarts you towards a great financial future for
Okay.
you and your family.
Got it.
So it's absolutely.
Okay, so how early can you, or how soon can somebody get life insurance?
Literally, once someone is out of the womb, it's actually 14 days.
Mm-hmm.
14 days on Earth,
Okay.
you are eligible to get a life insurance.
Now, not to put anything in anybody's head, but is it true that if the baby unfortunately doesn't make it in year one, that the parent still gets the money?
Yeah, the parents still can get the death benefit if the baby passes away, unfortunately. I mean,
Okay.
fortunate for the parents. Bad to say, but fortunate for the parents if that was to ever happen. But yes, they can get it.
Okay, so as long as you don't end up on forensic files, right? You can.
Yeah,
Okay.
don't do that.
Cool. For those that don't know Forensic Files, it is a show that talks about basically how certain people committed crimes like killings and how they got caught. And in some of these cases, it's crazy. Like, it's usually a case, somehow, some way, it comes back to life insurance.
Yes.
Now, I'm not telling that to anybody to say life insurance is bad, per se. I'm just saying, watch out, right? Just be careful on, for one, who knows that you have the insurance policy. Two, who has or who's the beneficiary of that policy. So can you talk a little bit about beneficiaries? What's a beneficiary?
A beneficiary is someone, a trusted person that you designate to receive the death benefit in the case that something happens to you.
Okay.
There's a primary beneficiary who is the main person, the number one person that will receive this death benefit once you transition off of Earth.
Mm-hmm.
There's a contingent beneficiary that you can also designate, and that person is basically the person that will receive the death benefit. When I say death benefit, I mean the face value of your policy,
Okay.
so the amount that there was received.
Exactly.
So the contingent beneficiary is somebody that will receive the death benefit in the case that something happens to the primary beneficiary, or it can be split 50-50, depending on how it's set up.
For sure.
There's also an irrevocable beneficiary, and that's someone that you also designate. Unfortunately, you're not able to change an irrevocable beneficiary unless they sign a document giving you the okay to change them.
Okay. There's two things that you said. First thing, I like how you said you transition from the earth, right? That doesn't mean that, you did die, right? You passed away, but you did transition into the next phase of life, hopefully heaven. But then you also talked about irrevocable. What are some typical irrevocable beneficiaries, or what would you say is a smart thing to designate as an irrevocable beneficiary?
An irrevocable beneficiary can be, your spouse.
Mm-hmm.
It can be a parent,
Okay.
trusted sibling. It has to be somebody that you really trust, somebody that has the best interest for you and your family. It can't be anybody random, because, you don't want to leave money behind with somebody that doesn't have the best interest for your family
Okay.
and for you. So,
Okay.
yeah.
So what about the number one trusted tool on the planet, a trust account?
Yeah. So, you can also use that beneficiary as your irrevocable beneficiary for your policy.
Exactly. And the point that I was trying to bring up there is that usually if it's irrevocable, it probably should be a trust, just because you can basically change the trust, but you can't change the beneficiary of the life insurance policy. And if you own the trust, you control it, then that's pretty much yours. And one reason why we use irrevocable trusts is because of the fact that we can avoid taxes, right? If it's irrevocable, it doesn't become part of what's known as your taxable estate. And so with that, you get to escape some estate taxes. So let's say you're ultra wealthy or you're pretty wealthy and your estate is worth over $10 million. The estate tax rate is 40% on that. And basically anything that's over 10 million. So if, let's say, your estate is 20 million, then you might have a taxable estate of 10 million. But if that 10 million isn't an irrevocable trust, then that means it's not part of the taxable estate. So you effectively escape the estate tax. The estate tax is the death tax.
That's right.
For those that don't know, when somebody passes away, you can get taxed. So they collect it from you on the front end, they collect it from you on the back end, and even when it's all said and done, at least they try to collect it from you. And it's even a concept in the Bible about the whole estate tax, the death tax, basically. Right. So just something to keep in mind there. All right. So how much life insurance does a person typically need?
It really depends. It really depends on the person. Like I mentioned before, the need for life insurance increases as you age. It really depends on your situation. For example, if I was a 20-year-old starting out, my career and everything, I mean, what am I trying to say?
The policy, the beneficiary, or the so
how
basically,
much you pay
yeah, the
monthly
premiums.
Yes, that's
Exactly.
I don't know why I couldn't say premium. The premiums are cost much less. So you're not really, hurting your pockets when you obtain life insurance at that age. But, as you age and you start obtaining responsibilities, you have children, you have businesses, you have people that depend on you.
Exactly.
That's where it starts increasing. So it's really important I can't emphasize this enough, it's really important to start early.
Exactly. Sounds good. As early as 14 days old, by the way.
Yes.
All right. So, in your opinion, what's the best type of life insurance out there right now?
The best one is a universal life insurance policy.
All right.
The reason for that being is that you can pay premiums at any amount. You can pay at any time, just as long as the expenses and the cost of the insurance is met. And like I said, you can put in as much as you can. You're basically building wealth over time. So you're basically getting more than what you're putting in.
Wow. Okay. That's good. So let's talk a little bit more about that. So this universal policy, what's the typical demographic, or what's the typical description of somebody who should benefit or who would benefit the most from a universal policy?
Those that will benefit the most, typically your younger folks.
Okay.
However, if you are, over the age of 45,
yep,
and you have a lot of money that you don't know what to do with it,
That's a good problem.
you can definitely get a universal life policy.
Got it. Okay. And is it true that some are indexed towards the market, such as the S&P 500, which is composed mainly of the top 500 companies in the U.S.? Is it true that there's some policies where there's a floor, meaning there's the minimum that you can earn on a policy, let's say 0 to 1% typically, and then maybe a ceiling, the maximum you can earn on a policy? Right now, the S&P 500 is doing 10%, right? So you're earning 10% on your policy. Is it true that there's this concept of a ceiling and a floor?
Yes, definitely. And to answer your question, there is a variable life policy. Basically, it's kind of like your whole life policy. Whole life is basically your traditional life insurance.
Okay.
There's leveled premiums, so it's a certain amount, and you pay it over time.
Okay.
Sustains up until the age of 100.
Exactly.
If you pass before it, then your beneficiary receives the death benefit.
There you go.
If you live until 100, you can, that's when the policy terminates. But of course, there is always, different stipulations with that. So with variable life, it's like your whole life, except your death benefit and the cash value, it fluctuates, and that depends on how the stock market performs. Typically, those that owns the policy, they can choose which sub-accounts that they want their money to go towards.
Exactly.
And depending on how those sub-accounts perform, your death benefit and your cash values increase. Never decrease, because, like you mentioned, there's always a floor of 0 to 1%.
Exactly.
So even if the stock market doesn't do so well, you're still getting 1%.
So you never lose money, basically.
Basically.
Man, I mean, think about that for a second, guys. So she just said something very important. I just want to make sure everybody understood it. So in a indexed universal life insurance policy, and also there's variable policies that allow you to do this, and then a variable universal life, you essentially are invested. Let's just say one of your sub-accounts is the S&P 500, or your investment option is the S&P 500. Then on average, the S&P 500 does 9% typically, right? Typically 9%. Right now, the S&P 500 is at 10%. So it's actually doing better than average. There's a floor, which is the minimum you can earn on a policy. And I know some policies out there that do 1% floor, meaning that's the bare minimum that you can earn on a policy. And then there's a ceiling, the highest point in the policy, which it can range, I've seen typically 13 to 15%. So for example, there is a Transamerica policy out there that can do 13%. And then I've seen policies that can do 15%. So there's a ceiling, and then there's a floor, but we're variable. Some have no caps, meaning you can earn as much as you want. So last year when the S&P 500 did about 26%, I mean, you would have just kept going. But then there's a floor of 0 to 1%. I mean, can you imagine that I came up to you right now and said, if you give me $100,000 to invest for you, I will make sure that you will never lose money, right? And it's backed by a lot of guarantees, let's just say. It's very rare for an insurance company to go bad. I mean, they have so much cash sitting around, it's crazy. I told you, you can never lose the $100,000, ever lose the 100. But you have the potential to turn your 100,000 into, let's say, 110,000 or 115,000 in the next year. And then the next year it can keep growing. Compound interest can multiply. You will never lose money in the policy. If I told you that, what would you say? Right? I mean, who in the world would say no to that type of investment. When I found this out, I said, you know what? I've got to get in. Let me see what this hype is all about. And so I got in. So we talked a lot about permanent or, universal life, and then also the whole life and the variable life. So why in the world would somebody get a term life then? Like, a lot of people have term life. Why would somebody get a term life policy?
Well, with term life, first of all, employers usually have group policies, and that's actually in the form of a term life.
Okay.
Your term life, it's only for a certain period of time. You can have term life for 1 year up to 30 years, or even more. You can renew it, basically.
Exactly. And what happens when you renew it? What happens to the premiums?
Your premiums increase.
Okay.
Because premiums are based on your age.
Okay.
Yeah.
All right. And then also, they use your health status as of the renewal period, not the health status from the first day you got the policy. Is that correct?
That's right. And so with your term life, you would typically see, your older folks, if they aren't eligible for universal life, or they don't have enough money to, get a universal life, your term life is the best bet for them.
Got it. So basically, somebody who isn't able to get a permanent, they should probably get a term policy at that point.
Right.
Okay, that's good. And also, too, to add to that, group policies tend to be pretty cheap. Like, your job is probably offering you something at $2 a month. I mean, how can you turn that down for about $50,000 in coverage? I mean, to turn that down wouldn't be the smartest thing in the world. So usually term is best if it's really, really cheap and it's really cost effective. But as a young individual, you probably have no business on a term policy, especially if it's not one within work or one that's tied to a group plan. So as a young individual, somebody who's young, who's a millennial, you're probably better off getting a permanent policy. And Yvonne brought up a good point. It probably should be a universal, preferably one that's indexed towards the market. So that's the strategy there. If you guys are like, hey, what should I put my money into? Where should I invest? I heard about this life insurance. What's the best option? That's usually the best option when it comes to that. Now, is it true that, or how can you, I probably gave up the answer, but how can you pull out money tax-free from a life insurance policy? Like, I heard this thing that you can get money tax-free.
Yes. So, well, first of all, the only policies that you can pull money out of tax-free is your universal life.
Yep.
Your variable life, and your variable universal.
What about term? Can you pull out money from a term policy?
You definitely cannot pull out from a term policy.
There you go.
You could also pull out from a whole life policy. However, it has to be in the form of a loan.
Yep.
You can't pull out in the form of a withdrawal. You can withdraw if it's a universal life or a variable universal.
Okay.
But in the form of a loan, it would be tax-free.
Exactly.
They would consider, they would assume that you are going to put the money back into your account. In the case that you do transition before you return the money into your account, what they will do is they will deduct the amount that you owe from your death benefit, and then the rest they will give to your beneficiary.
All right, sounds good. And we have Joyce who said, we stand, I guess that stands for something, STAN, a beautiful and an intelligent partner. She's awesome, Jeff, absolutely, and that's why I married her.
Thank you. Thank you.
But to elaborate on the tax topic, right? This is my expertise here. Basically, with a life insurance policy, if it's a permanent policy, just picture yourself with a bank, right, with your name on it. Bank, life insurance policy. or your name life insurance policy. With that bank, what you can do is it's open 24/7, first of all. It's not limited from 9 a.m. to 5 or 6 p.m. like a Chase Bank. You can go in there at any time. You can knock on the door at any time. You can take money from it at any time. You can do whatever you want from it. So with that bank, let's say you have $100,000 in that bank. You can knock on the door saying, hey, right, I need my $100,000. And ultimately, your bank, basically, the manager at that bank is going to give you the $100,000. In exchange, they're going to ask you to pay interest, let's say 5%. Now, guess who that interest is going to, though? It's going back to you, the owner of the bank, basically. So with this, you're borrowing the money from the bank, backed by what's backing it, right? The guarantor, or what you're putting up as collateral, is the death benefit, meaning that when you pass, or if you pass away, by the time you pay the money back, then you ultimately use the death benefit to pay off that loan, and it's still a non-taxable transaction at that point. And death benefit is also non-taxable as well to the beneficiary.
Yeah, that's correct.
But it can be a part of your gross estate, though, if you don't have it in an irrevocable trust. Something to keep in mind there. But that's basically how you can pull out money tax-free. And then, in a way, you can pay it back whenever you want. I mean, it's very flexible. It's your own bank, right? You're the one who created the bank. You basically set the terms. You set the payment period and all that good stuff. And, yeah, some people, they just borrow it. And, I mean, they pay it back over time. Sometimes they'll use their cash value to pay it back. They'll say, hey, just take the money out of my cash value each month, which is fine. When it's all said and done, they'll balance out your cash value and your death benefit, and then cut the difference to in the form of a check to your beneficiary. So it's beautiful. Life insurance can do so much. This is how you pull out money tax-free. Some people can retire off of life insurance tax-free. So very, 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 very important there.
How can you say no to
Right,
this?
exactly. Which leads to the next point. Last question of the day. Where can people buy this good? I mean, this stuff is good, right? Where can people buy this stuff?
Okay, so there's so many different avenues, but I'm going to tell you two. We did mention, your employer. Everybody can get it from their employer, but just keep in mind it's not enough to sustain you and your family. Mm-hmm. If you are going to get it from your employer, also, I would strongly recommend getting your own life insurance. It would definitely leverage you in so many ways.
Okay.
The other way you can get it is, through me. You can contact me at 847-906-3115. Again, that's 847-906-3115. Or you can follow us on Facebook. You can like and follow our Facebook page, Badu Life and Health Solutions, LLC. Mm-hmm. We also have an Instagram, Badu Life and Health. I can even throw in my email as well.
Yep.
badulifeandhealth@gmail.com.
Easy peasy.
You can reach out to me if you have any questions, or if you want to start your legacy today. You can reach out to me. I'm here. And yeah.
All right. Appreciate that, Yvonne. Very, very good. And I would like to add a note, too, that when you leave this world with nothing, you'll be remembered for nothing. When you leave this world with abundance, with something to pass down from generation to generation, that's exactly what you'll be remembered for. As somebody who left this world with something to show for it. And unfortunately, oftentimes when people pass away, they have nothing to show for it. All those years they've been working, nothing to show for it. Instead, you're left with a big funeral bill. You're left with debts that the person left behind, which goes towards anybody they put down as a guarantor. And it's just, the dynamics of the family is just, it's painful that the kids passed away, and I'm sorry, that the parent passed away, but the kids They don't have anything, right? Some people even go homeless after this happens. So it's a very serious topic. We talked about it in two ways. One where it's just more so for just protecting your life. And then the other way is building wealth while you're still alive, right? While you're still alive, and then you pass it all off when it's all said and done. So fabulous segment. We do have one last question, and it says, this is whole life or universal life in this analogy. Yes, this is for all permanent. You can do the loan option basically through all permanent policies. Just always read the documents and make sure that it's allowed. But to my knowledge, I haven't seen one that doesn't do it. So thank you, Miss Yvonne, for having this fabulous, joining us for this fabulous segment. I mean, I know our viewers learned a lot. They loved it. They also loved the whole power couple stuff. You know, I think it's important to have your partner, your spouse, involved in the business, involved in what you do, your vision, right? So always support each other, always have each other's back, and crush it together, build a legacy together. So with that being said, thank you, Yvonne. Any final words before we leave it off today?
Yes, I loved what you said. It's very important, everyone, to think about what you're going to leave your children, your children's children, what you want to be remembered for before you transition out. Definitely take advantage of this opportunity because it's there for you. You just have to jump on it.
For sure.
So thank you, Jeff. Thank you, WGHC, for having me. I really appreciate you and your time.
Yeah, no problem. And round of applause to the beautiful Yvonne. She did great. I think she did fabulous. She's kind of shy on the camera, by the way, but I think she's getting used to it, right? She did great. I think she did fabulous. Please feel free to share your comments. Reach out to us. Check out Badu Life and Health Solutions LLC on Facebook and Instagram as well. Feel free to call us anytime. We'll always be here for you. Shout out to Yvonne's twin sister, Yvette, who's listening right now. And also shout out to Peter from church. Shout out to everybody that joined us today. Hope you gained some valuable information. Hope to see you on December 6th. Bring your mask, bring a notepad, bring anything you got to bring. Hand sanitizer, all of that. All right, we'll be in a room. We'll be socially distanced, but we're here to provide valuable information. We'll also do a live stream for those who can't make it. Please don't rely on the live stream, though. Just, be there, gain that knowledge. We'll pass out some business cards, and we might do a special, maybe, a little bonus. So with that being said, thank you guys for tuning in to WJC LP 98.3 FM, Chicago, where change happens here, right? So my name is Chef Badu, and I look forward to continuously delivering you all some content. Thank you.
Rita Fromm, Allison Cornyn. Further contributors include Dave Isay, Stacy Abramson, Andy Lancet, Jad Abumrad, Marianne McCune,